What's up, guys? It's November 29th, 2023. Talk about the Emini and the downtrend. It was a really good day. I think it was really easy to find a trade from. Even if you missed the breakout, you could do leg one, leg two on the short side, long side, short side. I think you could almost be in a trade all day today. So I think it was a really good day. Hope you guys capitalized on it. I'm going to start leaving the 15-minute chart up because this is how I trade. I have the hourly chart, but I don't look at it too much. I do have the 15-minute chart on the left and then the 5-minute chart on the right. We started talking about both together. First bar, we have a big gap up, and by now we all know this is a bull bar with continuation. Bar 1 has continuation, and then bar 2 is bad for bar 1. I think bulls that got along here are trapped and they're going to buy more. You can measure the 50% mark. And they stayed above the 50% mark, so looks like the 33% mark. This is 33.66. The 33% level got hit and it bounced for another push up. The leg one, leg two. Leg two looks like it started to fail. And I'm going to try and leave patterns up here. So here's the wedge top I'm looking at, and it starts to fail with the inside bar. First 6 bars of the day, it looks like a wedge top that's starting to fail. We have one big bear bar that takes out the last couple bars range. So this bar takes out this bar's range. And then this bar starts to reverse bar 1, which is huge. Bar 1 was really good for the bulls. So imagine how the bulls are feeling after seeing these two candles. Probably not too happy, especially the bulls that bought these highs. We get a breakout from the opening range. Immediately I look for a measured move. I didn't get short. 100%, 200% was hit. 2R of the opening range was hit, which is really good. If you get short here, you just hold, put a stop. And that also lines up to be the gap fill. So I've noticed that these measured moves, if you do them right, they line up with market structure. I'm trying to look for measured moves that line up with market structure. Like even check out the leg 1, leg 2, it lines up. That's how I pulled it from the top of this wick. See, it's a little bit deeper than the gap fill, but it hits the EMA. So there are a lot of different ways to do it. I think you should have both ways up. There's no correct way. I mean, there's no correct one way. So yeah, I think this is a good short here. Bears get short, and bears get short into the EMA and start to take profits, and bulls try and buy. I'm going to say that is around the 50% level. Okay, so it's trading below the 50% level. Yeah, so that's not good for the bulls, so they're trying to get back up at above the 50% level of the gap up range. And they have a big bar right here that looks like it'd be strong. This bar bounces off yesterday's high and it closes above last week's high, so that is good for the bulls, but this bear leg looks too aggressive, and when we see this, I really think we should be thinking like leg 1, leg 2, or breakout, or something. Like I didn't take this breakout because we're very close to the EMA, but I did take this short, or I got short here. I got short around here because this was a double top bear flag, leg 1, leg 2. Lots of reasons to get short. It was a really nice trade. Small. It was a very tight channel, and the way I found my PT, I just went for 5 points, but I'll talk about that in another video. I've been doing quite well just going for 5 points with one E-mini contract instead of, I was like looking at my trades, I'm like, this makes no sense. I'm trying to make $300 a day, 5 contracts here, 2 contracts here, 10 contracts. I'm like, if I trade one E-mini and get 5 points twice, that's $500, which is more than my target, which is more than my target and less than my work and less work that I have to put in. So the last couple of days I've been going for 2 5-point trades a day, and it's been working out awesome because I can spot this leg 1, leg 2 move, and there's 5 points. See, I do remember now I'm talking about it. I got short here. Let's say I get short for 10 points. Okay, so in this situation, it does work. But more so or less, it usually goes like 8, 9 points because I'm entering a little bit late in the trend. And I'm like, one of the presenters said, like, if you could fix your trading, it's usually one thing. Usually you have a bad entry, your stop is in the wrong place, or your exits are in the wrong place, your limit orders. And I was like, I think I have good entries. My stops are either 10 points. They used to be either 10 points or where market structure is. So it's not that. And I started looking at my trades, and so many of my trades turn around. I was like, it just started blaring at me. It's like it's my profit taking. So I reduced my position size amount. My stop is 5 points, and my take profit is 5 points. And I've been making more money doing less work, and I can think the markets through. Things are looking way better. It is hard not to want to keep trading, but I think that'll iron itself out over time because I'm doing less work and making more money. Yeah, I'm gonna leave it at that, and I'm gonna get back to the price action. So yeah, leg one. Excuse me, that's my dog. He's crazy. I don't know if you guys can hear him. He's a nice guy though. He is really actually nice, I promise. So yeah, that's a leg one, leg two. Here's a double top bear flag. I think it's hard to say what you guys are doing. If you're swing trading, obviously hold for your swing, but I'm always getting out around the EMA. I used to hold for moves like this, and they do happen, but sometimes it takes a while for it to happen if we're in a range. Today was really good, so I don't think all the days are this easy to trade from leg one, leg two perspective. And then the bulls get a nice pullback here. This was a bull flag. I didn't take it because I just wanted to stay to the short side in case we got a big leg one, leg two move. I'm trying to just be more patient. I did see this. I wanted to get along here and go for yesterday's high tag, and it would have worked, and I would have made my 5 points. Also, that's another thing is I'm not feeling FOMO anymore. I used to get a lot of FOMO of like, am I going to miss this move? What if it's the only 20-point swing today? And now I feel more confident 4 or 5 point swings, 5 point scalps, whatever you want to call them. A scalp is just a trade with no pullbacks. So 5 points is quick enough to get filled with one bar. So yeah, this is another leg one, leg two move I saw today, and it worked. That was so cool. I was just watching this. I was like, wow, look, remember I said about this leg one, leg two, how it lined up with the gap close? This leg one, leg two lines up with yesterday's high. Yesterday's high is the breakdown point for the second leg. It's like a puzzle. You guys see, it's all starting to fit together slowly. Like, look at the confluences between this leg, this target, this entry, this leg, this target. It's all like, it's a puzzle. It's starting to come together. And the market goes into a range, after we gap up, we sell right back into the range that we've been trading in. We've been trading in this range for a long time. So we sold right back into the range, and when we sold back into the range, I thought we were going to go for the 50% level, but the bulls defended it. So, and we have a big down, big up, and the market goes range bound. When the market goes range bound for over 20 bars, the market has become 50-50. However, the previous moves can influence the range. So the previous move was down, and we do range for over 20 bars, but then we start to get more bars that are bearish, like stronger bearish moves. See, look at the bulls kind of losing their steam around yesterday's high. I think the market's looking at the breakdown points, and it's very easy to get chopped up. Right here, I was like, oh, this is barbed wire, stay out. I did get a little chopped up around here and here, but I made it all back here and here. So it's good to just stay out and wait for a follow through. Look, these 3 bear bars are the only 3 bear bars within this entire range. So what I mean by that is, so from here to here, that's about the range. Make it clear, make that black, make it. Okay, so now do you guys see the range I'm looking at? So to avoid barbed wire is double top and double bottom. And this is what we have here. Look, double top, double bottom, double top, double bottom, double top, double bottom, double top, double bottom, double bottom, double top, double top. Do you see? It's very bad for us to trade unless we're trading limit orders. And this is a range. So if you get short here, look, you short the low of a range, and then this range goes back and almost tags the high. We could say this is like this level right here is getting a little more respected, and that because we are doing bodies actually, so that is correct, the body. And look, it's a range bound environment for about an hour. It's scalp, set limits, limit buys, scalp out, limit buys, scalp out, limit sells, scalp out. But this is what I want to talk about when to trade these, which I'm trying to get better at myself. I got a little chopped up, but I managed to spot this price action, which I want to talk about. Okay, so look, two bull bars, double top, double bottom. We don't trade it. No continuation. Okay, two bull bars, double top, double bottom. Okay, we don't trade it. Then we do get 3 bear bars here. That's pretty good, but then look at the follow through under the EMA. Excuse me. After a tight bull channel, the first gap bar can sometimes be faded to the high of the range, and that's the setup we got here. I didn't take it, but I noticed it after the fact. I was like, oh my gosh, tight bull channel. First gap bar. This is a bear gap bar, right? And get filled. And then we're in a range bound environment, and the gaps get filled. Bulls get a gap up, and it immediately gets filled by the bears. This looks like a 2-bar rejection. I got short here with my stop up here, and I just kind of sat through it, and then, or maybe I hit out on the double bottom and got short again. I can't remember. I was in this trade here because the bear pressure was picking up. Excuse me. I got the hiccups. I'm trying to hold it in. Here's the flag I saw. And the double top I saw was right here, and I picked the limit order and I got filled around here, or a buy stop or a sell stop order. And what we see here is double top. We have a pull. Let me delete this red thing. This is an implied pullback. So leg 1, leg 2, leg 3. That's inside. You see the pullback? Leg 1, leg 2, leg 3. So 3 pushes, a double top, and then they get a head and shoulders reversal. That's what I wanted to talk about. Do you guys see that? So it's a lot of nested patterns, and this is, I think this was pretty cool because we can get a leg 1, leg 2 move from here to here, and that's how I found my PT. And I did extend since I was pretty confident in the leg 1, leg 2 move, I did pull my 5 points from my entry was like around this bar. I think it was like right here. Yeah, this was that would be my PT. But I was like, leg 1, leg 2 is highly probable. We have a lot of selling pressure, so I extended it for a couple points to this PT, and it worked out nicely. We could see that the market started taking profits. But in terms of leg 1, leg 2s, let's check it out. So another leg 1, leg 2 I saw today. I didn't get to trade it from this perspective till after the fact, but was it something like this? See, it failed. Honestly, that's kind of. I was thinking it'd be cool to line up if we did tag to 50% yesterday's low. I'd be like, wow, that's a big one. Leg 1, leg 2. Also, something that was pretty tight. In Al Brook's book, he says, when we have a good trend from open, expect a deep 2-legged pullback that could sometimes flip the always in direction, and that's what we got here, a deep 2-legged pullback that really did flip the always in direction. However, he also says after the deep 2-legged pullback, expect trend resumption and for a new lower high to be made. That's also what we got here, so that was really cool to spot it on the fly. That's why I wanted to hold. I shorted on the lows, but I was like, hey, deep pullback, trend from open, we can hold for a new low. Where am I going with this? I'll do leg 1, leg 2 moves. I wanted to go and look at the 15-minute chart real quick. Look at this breakout bar. Excuse me. This breakout bar is really nice. It goes all the way into last week's high, and they have a small pullback with a double top here, and they get their leg 2. Here we have the bull leg, which is a pullback of this. It's testing these lows, yesterday's high, and we sell for another leg 1, leg 2. So yeah, 15-minute chart is pretty nice to me. Now we're gonna I just want to pull all the leg 1, leg 2s with you guys. Leg 1, leg 2. Look, that worked out a little bit better. I pulled it from body and then went wick to wick. Let me see here. Leg 1, leg 2. Wow, look at that. Even the bulls got leg 1, leg 2. I'm gonna delete that. Did you guys see that? So there's leg 1, leg 2. Leg 1, leg 2. Okay, and then we see this leg 1, leg 2. However, I did it earlier, something like this. Leg 1, leg 2 lines up here. Then the market goes range bound. We talked about that. This is a no trade zone. However, once the market starts to break out, it becomes acceptable to get short around range lows. 1, 2, 3, 4, and the bars are getting bigger each bar is getting bigger than preceding bar, the following bar, the previous bar, right? Because preceding's next, so follow. You guys see what I'm saying? Like small, bigger, bigger, bigger. The one thing I was saying in a trend is you want to see orderly formation. So the bar should be relatively the same size, and this bar is climactic. So I think it makes sense to take profits at the previous low and wait for if it's going to reverse or continue. In this situation, we got continuation. And here's the second or the fifth or how many leg one, leg twos. From there to there, or you can go from this one worked a little bit if you did it at the bottom of the range, but or let me do it from here to here and pull from the top. I think that's a better pull from the top of this range. The wick, you guys see the wick to the bottom of this wick, and then the top of this wick to the lows. And the market starts to take profit. I think this was a leg one, leg two move. That wick looks higher. Yeah, I mean from the bottom here is clearly met. You can go for 2R since it's small. You see that? That was 2R right there. Do you see this pop up? So you could literally be in a trade all day today. And if you held a short here, you could be in a trade from the moment bar one closed. You could enter for leg one, leg two. That's really insane to think about all the leg one, leg two trades we got today. I took a couple. I got a little chopped up, but I ended up green about up 350. Which, see what I'm saying? Like, I got chopped up and I gave away some gains, but I ended the day up 350. And that's really good because I can't do that with micros. You just can't. And there's too much commissions and using a trade copier, there's slippage, and it's a mess. So I'm going to be sticking to a 1E mini and just focusing on these 5-point scalps because I'm making more and doing less, and I'm reading the markets better. That's what's crazy is I'm reading them better. In the moment, in the flesh, I'm able to read it better by trading way less. So from that perspective alone, it's worth its weight. Man, the daily chart is looking flimsy, a little loosey-goosey. Look at that, all these wicks, we failed around last week's high. We pushed right above the 50% level. Bears definitely want to close below the 50% level, then into last week's low. Tomorrow's the last day of the month. We could get trendy. We've been ranging for quite some time. It would be nice. I mean, today was a leg in a downtrend. A trend in a range environment, a downtrend in a range leg, something. Yeah, so daily chart's looking pretty flimsy. Let's take a look at the weekly chart. Real quick. What does the midweek chart look like? Oh wow. Straight up doji. So we opened, we've gone up, we came down, we came up and closed somewhere here. Or vice versa, we came something like that. Not good for the bulls. Obviously they want to see a follow through of this bar. But look at the trend bars. It's big, small, big, small. So if this bar was going to be the next bar, it would have to be big to keep the formation orderly and going. And speaking of, hold on. See, look at this uptrend, how all these bars are relatively the same size. And it's a tight bull channel. Yeah, it had its failed breakouts at lows, but it's in an orderly formation. So this is a good trend that can keep going for a while. Whereas this trend would get bigger, smaller, bigger, smaller, bigger. It was climactic. This was more orderly. Of course, this is the weekly chart, so it's going to look more uniform. But you guys get the picture. You guys get the chart. Yeah, that was corny. Okay, daily, here we are. And then this is the hourly. Hourly is starting to get congested. Definitely went from a trending environment, and we can clearly see how much look at this, it's just clear overlap. So if you guys are making money, good job. I've been shredded making money, except for when I switched to the 1E mini contract. I've been doing all right. So I hope you guys are learning, hope you guys are studying. It's going to be a good year for all of us. I think, in my opinion, this year's kind of over. I'm taking a little bit more time off trading and just focusing on what I have to do to be profitable next year. Definitely think about what you guys are going to do next year. Like, start thinking about how much money you want to make and reverse engineer it. Most of us trade with Apex, so we can add accounts and we don't have to size up, which is really nice. And that's like adding one account. It's like adding a whole paycheck or adding a whole employee to assist a business you don't have to pay for. which is really crazy to think. When I mean like you don't pay for the employees' tools, nothing. We're just clicking buttons. So think about it. Get your goals written down. Sort them out for next year. Hit the follow button. I drop these every day at 3 p.m. Have a good day. Study. Use your stop loss. Good night.